Hi, interesting subject today. We're talking about journals. Don't run away, they do help make profit. Roll the intro and I'll tell you. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the Scruffy Trader. What I'm trying to do is put trading in the real world. So if you like the sound of that, please click the subscribe button and drop a few comments below, because your comments genuinely drive the videos for the channel, because I answer every single one of them and I try to carry out your requests as well, which is what this whole video is about today. You see, I was requested by one of the subscribers, Sheldon, a little salute to you, my friend, who asked about journals. I do apologise, I'm a little bit late getting it done. It's been a hectic time and I'm finally getting round to doing it for you. But I was also asked this week from Anton as well, and had a little chat with him the other night, a few messages backwards and forwards. And he asked the same question about, do you journal? And the ultimate answer is yes, every day. And I know most people at this point will be going, journal? Not watching that. That's not going to get me a Lamborghini. Well, if that's all you're here for, go watch these guys.
You ding-dong!
Give it to me again.
You ding-dong!
Because I'll guarantee they don't do journals. And that is just the land of make-believe. You see, if you're into trading and you enjoy it, it is a job and a professional career. And any professional career has paperwork. And for us traders, that paperwork is a journal. So what I'm going to do is I'm going to show you a spreadsheet-based journal, similar to what I use. And it also helps with your stop loss placement. Well, not so much the placement, more the risk of how far you can go with your stop loss. It does have a compounder on it. It also has a wage maker sheet on it. And they're all roadmaps to help you hone your skill as a trader. So let me jump on the screen and I'll go through a simple journal for you to see. And then hopefully it'll give you some ideas for your own journals and some better trades. Come with me. Okay guys, so as I was saying in the intro about the importance of why you should have a journal, this journal that I'm going to show you is an excellent way to roadmap what you're going to do. It's built up mainly by the journal's front page. This is where you put most of your information. And then it has the other components that help you see how well or how bad you're doing for that matter, and give you a quick eye shot as to the figures. And then you also have your goal points as well. And I'll show you what I mean. So the Pip Counter is exactly what it says it is. Its job is just to tell you how many pips you are pulling in per week, per month. And you can see whether or not your win rate, risk reward, is paying off. So let me explain. So you're on Monday and you're on a pound a point and you pulled in 20 quid. Brilliant. You made 20 pips on that day. You do not change any of the figures in blue if you get this sheet, because it has calculations within it. But it then works out exactly what's going on the next day, or the next trade rather. You did 125 a pip, you pulled in 23 quid, and it's adding it up all the time. And then on your next one, you were at a pound, but you lost 15. What I mean by giving you an eye shot of whether your win rate is correct, you can quickly see you took 3 trades, look to the left, and you're still in money even though you lost. So you know your win rate is correct. Okay, it gives you a week's running totals up here as well, how much money you're making, how many pips you are making. Very, very simple stuff, guys. Okay, and then what is happening is you're building up a picture right the way through to Friday. So you might be on a $5 point now, $5 position rather, and you made 25. So there you go, you built it up, and the current week is making you £53 result. Okay, so just pop it in here. So you made 53 and 28.4 pips. All right, and then you can reset it and be ready for week 2. Just clean that off, and that's it. And you would just build it up through the week, and then you can see what you're doing for the month. And you can put your little goals down here. Say you want £100 a week, there you are. Pound, 20 pips a day, gives you 100 per week, which will give you £100. All right, so it's all it's for. It's just to give you a visual eye shot. Then you have your compounder. You've seen me talk about this thing many times before. There's nothing really behind my head. It's just the balance. So say you start with 250 quid and you're running on one position. You just set them to 0 and you would set your open trades to 1. And what it's telling you is if you did 10 pips at 50p start, you would make £5 per trade. And then it'll show you what the compound effect is if you compounded that 50p by 5% each time. So you win a £5, you up it by 3p. And the reason why I like upping the bid size rather than trying to do 3% of your pot is it's easier to swallow and the returns are far much better. And you'll often see me scale within a trade, and all of the scales was built on a spreadsheet similar to this. This is based on scaling with 3 points, and it's just to give you an idea, but let's just say you're with the same bid, 50p, you decide that it's going to be split into 2 positions just to see if you can, oops, sorry, wrong side, just to see if you can get that little bit extra juice out of it, because many times you'll hit target and that bloody thing will keep on running, which is why I scale in the first place. But it's also because I don't actually know how far the market's going to go. I might put a target in at 25 pips. What if it only went 18 and then came back and took me out? I wouldn't be very happy. But if I had 2 scale points in at 10 and 15, I'd have been paid twice, and then the third one I'll just run along. And yes, I've had the argument saying you're not giving the trade its full potential, but I'd rather have 70% of a winner than 100% of a loser. You hear me say things like that all the time, because it's true, and over time it is more profitable. Okay, and then that's all you're doing. You're just increasing your bid ever so slightly, and what happens is the bank increases quickly. And think of it this way, there you go, 2 positions open at 50p, ending the week on 61p, and you had a return on £250 of £34.54. There is not a bank or institution in the land would give you that return on £250. And this is based on 15 pip win. Very simple, very easy. And again, it gives you direction as to get to where you want to be. Okay. Which takes it over onto the wage maker. Everybody loves this. All right. What it does, it's based on one trade with an average win of 20 pips. Okay. So I'll just move that over there so you can see it. Okay. And you put in the figure that you want to earn as a wage. Now, when you're just starting off, you mightn't have a great deal of money in the bank. So you're not going to be driving the Lamborghini, guys, but you can get a wage. And I'm going to show you something right now. I'm not sure what minimum wage is, to be honest. I think it's about 15 grand a year. But we'll just say it's £15,000 a year for argument's sake. This side is showing you the breakdown of what you need to do every day, every week, every month. And it is based on a 48-week month, 48-week year rather. Because remember, if you're a full-time trader, you're self-employed, and when you're on holiday, you don't get paid. And I'm kind of assuming you'll want 4 weeks off a year. Week at Christmas, week at Easter, a couple of weeks in the summer, that sort of thing. Okay? So this is what you need to achieve each one of your working 48 weeks. So if you're looking for 15 grand, trading once a day and getting 20 pips, you need, well, there's pretty close. So we'll go to the next step up, which is 16,146. So that's not bad, a 16 grand salary. And your pip size needs only be £3.36. And that's trading once, 20 pips a day, 16 grand a year. There's your wage. All right. If you can stretch that out to a £5 a pip, you're not only getting paid, but you've also got a bit of a buffer that helps grow your account and offset any losses and still give you your wage. All right. And if you think about it, sort of when you're looking at what I do, because some people think it's ridiculous, I say I aim for around 70 to 80,000 pounds a year in salary. And you often see me at around £20 a point, £25 a point. Well, there you are. There's 81 at 17. And there you go. So again, it's principle's the same. I'm aiming around here, and then the position size you see is a little bit of a buffer to offset the losses and everything. And my salary was built up on that. So I built up how I needed to get to the pot that I need to pay for the position size using this. I then went to wage maker. I popped in my salary. Well, I'd like that salary. Just a professional salary, which is that. Okay. Which then you pull down, which is roughly there. And that gave me my pip size. And I am comfortable with the pip size that I'm at. And as my account grows, that becomes more comfortable because I'm not overstretching myself. And that's why you see me reasonably relaxed, because my account can take quite a bit of damage before it physically sort of makes me sort of think, oh, you know, I can lose a bit and still survive and fight another day. All right. But it was all built on working out the maths, because I only want to trade once or twice a day. So this is what I'm looking for. All right. I'm looking down these areas to see where I need to be. So to trade once a day is 15 quid. It's easy stuff, guys. The graph, well, the graph is exactly what it says it is. It's a graph that gives you a visual representation of how well or bad you're doing in the markets. Okay. So if you put your starting balance in here, £1,000, and then either the last day of the month or the first day of the month, just put in the balance on your broker. Say you start end of January and you had 1,300. It'll quickly work it out for you. In February, you did pretty well. You got it up to 1,600. it's showing you that. It then dropped back because you had a bit of a bad time, and it works out. And then you can quickly see whether or not your equity curve is going up here, because there's nothing wrong with dipping down as long as the general direction is that way, because you know where your starting point is. And then you can quickly look at this and find out where your bad months were. And then that takes you to your journal, because if you know there's a bad month, you need to know why it was a bad month. And your journal will identify that for you. And then within the journal, you can find out what makes you good and what makes you bad. And this whole channel started because of a journal, because I record my trades. It's why you see a lot of live trade guys, because I do it every day. I record every single trade, and if I get it wrong, I can replay it back and I can see exactly what I did wrong by seeing where I entered, why I entered, and it's that simple. And then through time, that sort of visual representation of what I do in the markets became this YouTube channel. Okay, and I also wanted a hobby, and anyway, here we are. So looking at it, it doesn't look spectacular, but it's because this one, I've kind of tried to make it as user-friendly as I can, because I know the ones that you've seen me use in the past can be a little bit complicated. So I wanted to show you an easier way to record your trades. Okay. Now this is a single sheet, and it just continues on constantly, start of the year, and it just keeps on going. You could do a sheet for each month and just keep it in a folder. I've seen a couple of guys do that. Up to you. Depends on how you want to use it. But the idea is, in this section here, you write in your rules. Okay, and your rules could be whatever it is, like a moving average cross. I only work on an hour's time frame for entry, etc., etc. But it's in front of you, so you've constantly got it as a reminder and a checkbox. You know, because you might find in these sort of trades that you are having a hard time every time you put a trade on late at night. So one of your rules can be, I only trade between 7 in the morning and 6 o'clock at night, because that's when the liquidity is there. And each time that you have made a mistake, it seems to be at 8 o'clock at night. Yep. There's noisy in the background as normal. So, all right. But if you're putting trades on at 8 o'clock at night, the spreads have widened up, maybe liquidity's not there, you can identify a pattern. Okay. So that can be sort of one of your first rules. When do I trade? Tick. Things like that. So that's what that's for. Put starting balance in, maybe 1,000. And it'll tell you what your current balance is. Okay, this is your current P&L, percentage P&L, how many trades you've taken, and what the win rate is. Okay, this section here is just balancing out to your compound plan, so you don't have to keep flipping backwards and forwards. You can start at 50p, just like the compounder, and it's telling you what your next bid size will be based on a 5% increase. You can change that. You could set it for, say, 10%. All right. I like 5 because I think 5 is a good number. You're not stressing yourself out too much at any one time. And then it's going to tell you what your average win over time is and what the average pips are at any time. And then your wage is what you've drawn out of the broker. And that'll be reflected in the balance. So if you took £100 out, that would show 900. But your P&L will keep on counting as if you've never taken anything out. So you can see what your increase was at the start. Okay. And that is pretty much what that section does, right? It's nice and easy. And then to fill it in, that's as simple as it gets. There's your date. Put in your current balance, which is 1,000. Your risk, which is the great debate amongst everybody. You do want to keep it as low as you can, but you also want it in the realms of possibility, you know, because you've still got to make some money. But the average consensus is a 2% risk. And what the sheet will automatically do is it'll work out the monetary risk that you're taking against your current balance. So in this case, it's £20. Put in your bid size. Now, you've got your bid here. So you put your bid in. And it automatically tells you how big your stop can be. So if you've seen a trade and you think your trade needs a 30 pip stop, you can look at this and think, well, to stay in the parameters of 2%, I can go up to 40. So I'm well within the tolerance. Now, if you want to be a bit box clever, you can alter this and think, well, I've got a bit of room, so I'll up my bid size a little bit. Oh, I've added 5p to my bid size, and I am still within tolerance because I think it's 30, and then happy days. All right, so it helps you work out your bid as well, because these aren't set in stone. They're just guides to protect your account. Okay. Then on your P&L, it's about as simple as it gets. It is your P&L. You put in how much you've won. 65 quid. Excellent. So you won. You have increased your balance by 6.5%, and it was a 3.3 risk to reward. Okay, so you got 3.3 times more than what you risked, and it gave you your pips, which is 118, and it puts it all up here. Wage, we didn't draw anything out today, and then you put in what market you were trading. So say you were in oil. You went at a level of 200. You got out at 13.18. Okay, I was in a great mood, good mood, and I did it at 10 a.m. in the morning, which then it goes back to what I was saying about your rules up here. You know, if one of your rules is I trade between 8 and 6, yes, tick. It follows on, and then you can carry on just writing various notes. Was in a trend, etc., and that is it. And then you just continue to fill it in. You know, next trade. So we're now at 1065. I'm still at 2%. I'm going 50. It's allowing me 43 pips because the balance has increased. So it's allowing you your little bits of tolerance, but you're still 2%. But this time I lost 12 quid. Okay. So it's now telling me what my win rate is. I've taken 2 trades and I've only won half of them because I won one, lost one. And again, you go across oil, entry, etc. All right. Do it again. Down to 1053, 2%, 0.53, 40 quid. Put my win rate back up, you know, show me my increases, etc. But now I've decided that I don't want to risk the £93 that I've won. I want to take some money out, so I'm going to take £50 out. So what it's done is it reduces the balance, but it leaves the P&L the same. So you still know in your mind that you're making money, because what if you took out more? See? So even though your balance is less than that, it's because you took the wage out. So that keeps you running, so you know you're still in profit. And you just carry on building up a roadmap using a spreadsheet like this. And this is an excellent spreadsheet in the sense that it works out your risk and your bid sizes for you quickly without too much thought. And while you're putting in these population figures, you have that in front of you, which are your rules. So yes, you're entering a trade, and before you press the trigger, you can quickly glance at the rules and go, yes, 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 yes. Okay, I'm gonna go for this, and then you carry on. And that's what a journal does for you. It roadmaps where you've been. It can highlight your weak areas and also highlight your strong areas. And these are things you need to know, because if you don't know what's weak, you can't fix it. And if you're strong, you need to know why you're strong so that it doesn't become blind luck. And that's why it's important to fill in a journal. I know it's not the most exciting thing in the world, and everybody just wants the money. And show me the money, give me the money. Well, I'll leave it to these idiots.
You ding-dong!
Because I'll guarantee none of them journal. But every successful trader journals. And I journal mine every single day. You know, and I've done that for 10 years. You know, probably even longer than that. But certainly the last 10 years, I've kept a journal, and I can refer back to it whenever I'm under stress. Okay. So that's it, guys. I hope that kind of all makes sense. If you want links and what have you for it, you'll find it in the comments below. And I'd be interested to see what your ideas of journals are. So please drop a comment. I do answer every one of them personally. And I do my best to get back to you as quick as I can. And that's it, guys. So remember, do what you love, and the money will follow. See you all in the next one.